Okay, no more DCA trading for me. Dollar cost averaging. I'm not going to do it anymore. I'm going to show you why. It has to be something you learn on your own and hopefully learn from practicing that particular technique, because it really is very bad. And even if you have a daily loss limit that limits your losses, you can still continue to hit that daily loss limit over and over and over until it's virtually impossible to make it back. Now, here I'm going to show you three different accounts. What really was deceiving about the DCA trading, dollar cost averaging, is that you can do good for a while and it can be really great. Look at this win rate right here. I mean, I was up to 93% win rate, right? 80% of my days are winning, right? But all it takes, honestly, is just a few bad days back to back, and it just wipes it all out. It wipes it all out, guys. Completely wipes it all out. So since I have taken away that and got my mindset on just limiting my risk, having stop losses, taking my losses, yes, unfortunately, what happens is your win rate goes down, right? And so, you're going to be losing more days than you're winning. But overall, in this particular a challenge here, I'm still going, I'm still making it, doing good, but you're going to have fewer win rates. You're going to have a lower win rate. You're going to have lower win percentage days. But you're going to, if you have a good strategy and you can limit your risk and you have stop losses and you know where you're getting out, it actually forces you to take better trades. It actually forces you to think more professional. And I like that. I actually do. I'm glad I got the DCA out of my system. I think everybody has to go through that, where they think they found something that's going to work, and it does work for a while. Again, look at this. I was up $8,000 right here. I was up, let's go see. I was up about $8,000 right here. $8,000, right? And it just doesn't have a long-term winning probability. Okay, and right here is the real money account, live accounts, and what's going on here is I'm just going to start using the professional trading strategies that I have. I got plenty of strategies, ideas, momentum plays, trend line breaks, all kinds of patterns that I like, that I can limit my risk. I know where my stop loss is going to be, and if it doesn't go, I accept. The hard part about transitioning away from DCA is accepting your losses. And that's something that I try to avoid. I wanted to win every trade, and I thought I could win almost every trade. And I did have a 93% win rate. And that's the illusion of the DCA trading system. It's very deceiving and gets people to think that that's the best way to trade. And it's a profitable way to trade, which it is not. So now that I'm giving that up, now every trade that I enter is going to have a preset, pre-thought out risk limit and stop loss level. I'm taking all my trades according to that mindset and that practice. I actually feel better. I'll be honest with you. I've got my stuff all calculated to when I'm going to be taking trades. Let me show you my rules now real quick. And I think these rules are basically simple for determining which direction I'm going to be biased in. And really, you only have three things that are the option. You can go long, you can go short, or you can wait while price is pinched. So I've got my question here is, I'm going to be asking every single day when I come in to do this, is the day a green day already from the futures? Is the day green or is the day red? Pretty simple, right? And is the day above or below the previous day's levels? Like, is it below the low of the previous day? And is it red? Because I'll show you some pictures, but I'm going to be pretty much short biased on that day. Same thing with a bullish day. Is price above yesterday's or previous day's high? Is it green? Then we're probably going to stay long. Let's just stay in that direction, and all of our trades are going to be lined up for that way. All right, and are all my time charts synced? Like a 15-minute, 5-minute, hour? Is everything lined up, pointing in the same direction? What are the key levels, Fibonacci levels, and what are my A+ setups? I got a few trade setups that I really love. Breakdowns, breakouts, momentum, trend line breaks are really, really nice. moving averages where price comes back to the moving average and then fades off of it. These are all perfect setups for me to trade. Actually, let's take a look at some of these real quick here, because I am done, honestly done, trying to do DCA. That's ridiculous. I found out it's ridiculous. So is the day green? Hey, let's take a look at this. Is the day green? And it doesn't matter if it's overall a bull market or a bear market on the weekly or daily, because you'll find green days, strong bullish candles in a bear market. And I'll show you that. You can still go bullish in a bear market if everything else lines up, right? So here's an example of, is the day green or is the day red, right? When I come in, I'm going to look at it for the futures are already kicking. I'll be able to look at my futures trades, I'll look at the day and go, okay, today's a red day. What does it look like in comparison to the previous day's levels? And let's go from there. All right, so here's another example right down here. As you can see in this case, we have red days. In a bullish market. This is a bullish market. The market is going up. Moving averages are expanding upward, but you'll still find, red days. You'll still find them, and those are the days that I want to look at and go, hey, this is something that I can still trade if I have everything else lining up perfectly for me. These red days right here, I can still trade that to the downside, even in a bull market, right? Okay, so same thing with the bearish days. If it is a bearish market and everything's going down, there'll be days that our candles are bullish. And when they're bullish, you look at the previous day and go, is it above that level? How much room do I have to the next resistance? And just stay bullish today, even in a bear market. Okay, that's just the way I'm going to start looking at it. Here's an example of, is price above or below previous day's level right here. All right, here's the previous day's levels. And here you can see price had come down below previous day's levels. And when that happens, that's where we're looking to stay bearish, even if the overall market is bullish and trending up, right? Did price right here, look at this, on this day, fall below the previous day's levels? When I look at the day, I want to look at, did it fall below the previous day's high? Is the candle red? Okay, then if that's the case and it remains below the previous day's levels, I'm looking to stay bearish on it. Now, there's a lot of variables on that, because if it's hitting a trend line and it's red, you're looking for a bounce. I understand those variables, I really do. But in my mind, until it gets up over the top of the previous day, it's not a strong bullish day, especially if it's red, first of all, right? And secondly, if it's below previous day's levels. That doesn't mean it can't be bullish. It doesn't mean that one of these red days that have fallen below previous day's levels, it doesn't mean that it can't bounce and turn green. We see that happen. It just means my mindset is going to understand that this is a red day right now and it's below previous day's levels. That takes precedence. And then if it does get to a level where it bounces, I can use my bullish techniques, but I will keep a stop loss in place in case I'm wrong instead of dollar cost averaging. I will not keep adding to a losing trade, right? So here's an example right here. Let's look at it right here. You can see how this day, these wicks fall below the previous day. These are days. And you could sell off on those days, right? This candle, especially right here, was a great looking day that fell below previous day's high, and it was a good short day. Okay, so that's my example just for the bearish side at the moment. Same thing with the bullish day. If you wanted to reverse it, I'm not going to get into all that, but we do want the time charts to sync. Now, what I mean by that is, let's take a look at this here. All right. All the time charts are syncing. The day chart has to be red, right? The day chart has to be red. My 60-minute chart has to be bearish, right? And then if you use the 15-minute and on so on all the way down to my entry targets, which is the 2000 tick chart, has to be bearish, looking for good reversal patterns, guys, good reversal patterns, and looking for breakdowns to take place, and then boom, get in when the red candle takes out the green candle, and here's the important thing, here's what I've learned, here's what's essential. If you're wrong, you have to get out of the trade and accept your loss. That is the key to this whole thing. Dollar cost averaging does not accept losing. Discretionary trading, A-plus setups, you have to be able to accept your losses. You have to put your stop loss in, and that is it. Key levels, I'm not going to get into that right now. That is something that's important, but I don't need to get into all that right now. Let's take an example of today, for instance. I came in, the day chart was red. When I came in this morning, it was somewhere in this level here, and then I said, well, where's it at in relation to the previous day's levels? Well, as you can see, it was below the previous day's level, and I said, okay, well, let's go short. Let's stay short. Let's think short. Let's look at all the other time charts that I'm using. I got the 60-minute here. Where we at? Well, the 60-minute is, bearish, right? The 10,000 tick chart is also bearish. 15-minute and so on. If you can look at them all, everything's bearish today. Why in the world would I be trying to add to a long position, hoping to catch a bounce? Can people bounce this today and make profits? Yeah, you can. If you know what you're doing and you're really professional, you can catch bounces. But I guarantee you, those people are getting out if they're wrong. A professional trader might try to find a level and bounce it off something. I don't blame them. They're really good at that. They can do it. But when they're wrong, they get out. You don't keep adding. Let's see, I'll add here. I'll add here. You can do that a little bit, like 1 or 2 ads. I understand that there's quality ways of trading like that. But the big thing is when you're wrong, you have to get out. I would say my daily loss limit was going to be the value of the Apex 50K account. And I said, if it blows, it blows. I'm going to keep trading this way until I pass some accounts. Well, I lost 18 out of 20 accounts. I only have 2 left. And the only reason those 2 are left is because I stopped DCA. I said, okay, I'm not going to blow all these on this technique. I said, I'll just continue my trading with a realistic professional trading system using stop loss and risk management, and I'll get out of the trade when it does not work. And so you can see that you can buy on a down day and hope for a bounce, and a lot of people are really good at that. But the people that I see that are really good at that don't keep adding if they're wrong. That's the key. The hardest part about trading, one of the hardest parts, is getting out of the trade when you're wrong. And until we can do that, we're never going to be able to be professional enough to make money to pay our bills with trading. Okay? Until we learn to get out of the trade, we're never going to be able to do that. Now, and DCA, dollar cost averaging, deceives people into believing the deception that they can keep adding to losing trades and eventually they're going to win. That is a big deception. I learned it the hard way with these practice accounts, and I am done. I'm here to say I'm done with DCA trading. So I will be uploading videos now that are all about the trading techniques, trade setups that are more professional. And I hope that is helpful to some of you out there, because I know there's a lot of people who think DCA is the way to go. And until they find out themselves, and you do need to learn it yourself. Nobody can tell you. You have to learn it yourself. No one could tell me not to do it. I thought I had found something, and I finally learned on my own and the hard way that it just doesn't work. So find a system that works and be willing to take losses. That's all I can tell you on that for today. So I'll see you in the next video. God bless you. Take care. Peace.